2009, that's when I bought my first property, which was a duplex. And then a month later, I bought another 3 units, and I liked the rental income coming from it. Then I left my job in 2010 to do this full time. So in last 4 years, I've done about approximately 100 deals. 40 of those deals have been this year. I've done a 40 condo deal in Phoenix that I wholesale. Mostly I focus on rental properties, but in last few months I've been doing a lot of wholesale and flips to my buyers who are looking to buy investment properties for the long term. So that's what I've been doing in last, since the beginning of this year. That's what I've been focusing on a little bit more. And how I got started investing in real estate is, I had some money saved up in, from working for my job full time. And I was looking for some investment opportunities. I looked at investing in stock market, and it was possibly the worst decision I made. Lost a lot of money in there. I tried a few, I signed up for a few investment strategies, clubs, and bought some software programs, but whatever I did, it did not work out. Not even one stock worked out for me. So I thought, okay, let's look at something else. I came across some real estate investing. I was reading a blog online, and somebody had mentioned about investing in real estate. They were talking about flip. So how I got started was I bought a book. It's called Flip. That's how I got started. I read that book, and the same author had written another book called $1 Million Investor. So I read that book also, and that's how I got started. It talks about how there are basically 3 ways you can invest. You can flip a property, you can wholesale it, or you can keep it as a rental property. So flip was something, when I first started investing, I wasn't interested in it because I was working full time, so I thought it's going to take a lot of my time commitment. With wholesaling, I didn't really understand it well enough, so I thought, okay, that's not my cup of tea. And then I looked at buying rental properties. I felt comfortable with it, like, okay, this is something I can do while having a full-time job. So that's how I got started investing in rental properties. So that's what I'm going to talk a little bit about. When I started buying my properties, what were the things I was looking at, how I would decide on, okay, if I want to buy this property or not. Because back in 2009 when I started, compared to now, there were a lot more deals on the market. There weren't enough buyers as there were properties, so there was a lot of opportunities to invest. But every deal I did, there were certain criteria I looked at, and everything basically boiled down to the numbers for me. Like, if the numbers make sense, that's one thing everybody understands. Maybe having an accounting background, that was part of the reason why numbers were always the most important thing for me. If numbers made sense, no matter what anybody else said, I could prove, I could justify buying an investment because I could see the numbers. So that's what I'm going to be talking about. And one thing I want to make clear is the picture that I sent out to NICIA. It's a very old picture. Greg asked me for a picture, and I don't wear suits, so I didn't want to send a picture in a tank top and boxer shorts, and I didn't think anything was going to show up. So it's a picture from 3-year-old. I know it looks older than that, but okay. So when I looked at the benefits of investing in real estate, the biggest benefit is cash flow. Does everybody here understand what cash flow is? Anybody who does not understand what cash flow is? Okay, so that was the biggest advantage for me about investing in real estate, cash flow. Every month you have some money coming in. And the next is obviously appreciation. When I started buying in 2009, there were some properties the first property I bought was for $25,000, 2-unit duplex. And it was listed for $65,000. I made an offer for $20,000. I'm like, what's the worst they're going to do? Say no? I'm like, okay, fine, whatever. My wife tells me no all the time, so I'm okay with that. But going back and forth, they agreed for $25,000. I put $5,000 into it, and it rents for about $1,200 a month. Tenants pay all the utilities. And but about 7 years ago, the same property had sold for about $70,000 or $75,000. So I saw the potential that if I buy something, hold it for long enough, the value is going to come up. So, appreciation was obviously another huge benefit of investing in real estate. Another benefit is tax advantage. You get benefits of depreciation. You get to write off some expenses which you would not otherwise get to, like driving out to Indiana, and some of the other expenses like being part of NICIA. You can take these expenses as tax deductions, so that helps you with that's one of the great benefits of investing in real estate. And then, like I talked earlier, when I started investing, the three ways that I thought, okay, that I could be part of real estate: flipping, wholesaling, or doing rental properties. Flip is something where you buy, fix, and sell a property. Wholesale is where you just buy and sell to another investor for a profit. And rental property is where you buy and hold it. How many flippers do we have in the room there? How many wholesalers? How many people own rental properties? Okay. Did the people who own rental properties, did they just get started in rental properties, or did they do flips or wholesales before? Anybody owns rental properties?
It's actually, our first one was our own house. We bought our first house. I got a job a year later.
Okay.
It was too early to sell it again, so we just threw another renter in there and been paying for it ever since.
Okay. And so that's how you got started in real estate? Okay. Anybody else? Joe?
I just got started in doing rental properties, and that's what I continue to do.
Okay. But what got you started in real estate?
My ex-girlfriend. It was her idea.
Okay.
And then when it came down to actually doing the work, she kind of quit after about a month.
Okay.
I continued to do it because I enjoyed it, and that's now what I'm doing.
So did you ever look into doing flips or wholesale, or you pretty much focused on?
You know what? I went into it right from the start because I saw the value in the long-term investment.
Right.
And the monthly cash flow.
Right.
And I wanted to have something to, like insurance against my job.
Okay.
So if that doesn't if that doesn't work out, I still have something making some income, and when I retire from my first job, I'll have some income still coming in.
Okay. Anybody else? I know I saw another hand. Alicia?
I started with short sales and pre-foreclosures.
Okay.
And when
As
until-
rental properties, or?
When I would flip some and keep some as rentals.
Okay.
And then I went out and bought 13 rentals in one day.
Anybody else would like to give their experience about investing in real estate? Okay. So these are the things, when I first started investing, when I was doing flip, these are the things I would look at. The most important thing would be ARV, after repair value. If I fix up the house, how much I can sell for. What's the actual market value for a similar house with same amenities, with same features, with a basement, if it's a slab house, bedrooms, bathroom, the same, similar number of, the bedroom, bathroom, and the square footage should all be similar to the kind of house that I'm looking to flip. And then another thing would be repair cost. How much is it going to cost me to bring the house up to the market standard, what the buyers are looking for? Because when you're doing a flip, more often than not, you're selling to a homeowner who's going to buy it and live in there, for a long time. So you want the house to stand out, because there's so many houses on the market, and once your house goes on the market, it's the first week of MLS where you get the most attention. It's the first impression. You have good pictures. You make the house look nice. You don't have to put a lot of money into it, but you have to pick the right material. Just make it look nice so that it stands out from all the other houses that are on the market. And the other thing is, another expense that you have to factor in is the closing cost, which is your sales commission, your buyer's closing cost. A lot of time when you're selling a house to an end buyer who's going to live there, they don't always have a lot of cash to bring to the table. So a lot of time what you end up doing is give them credit to their closing costs so that they're able to buy the house with the limited cash that they have available. And then holding cost. Majority of people who do flips, they don't always use their cash, so they're using either a private investor or hard money lender. So if they do that, there's obviously some cost that you have to pay, 10 to 12 to 15% interest that you're paying monthly for the year. So you have to factor that in. You have to factor in the utilities. If it's going to take you 3 to 5 months to sell a house, you're going to be paying utilities. You're going to be paying the lawn maintenance and those kind of expenses. And then, so based on all these expenses, you calculate your maximum purchase price that you're willing to pay and still make a profit. So the flippers in the room, are there any other costs that, that you guys encountered that I may have looked over?
Taxes, insurance.
Taxes and insurance, I guess that, including the holding cost, but what are some of the problems that you guys run into when doing a flip?
One question, why do you do utilities on an empty house?
Well, you would have the gas and electric turned on. It's not a lot, but it's something that,
I know it's not all, it seems you're wasting money for an empty house.
No, but you would have to have
When you're in pipe, but when you're
Right.
fixing a house, you need the utilities on and everything so that you know that, you can be able to repair the house. Oh, okay.
I'm sorry?
Plus, when you're showing, you have to have the lights.
Okay, Rashaad, once you and a prospective buyer agree on a price, how do you help them out at the closing? Like you said, you mentioned something about you help them with points or
Yeah, let's,
closing costs.
right.
How do you help a prospective buyer with closing costs once you agree on a price?
I mean, let's say if a buyer only has $10,000 available in cash. Bank is going to want some money down, and then if the house that they're looking at, if they don't have enough cash to bring to the table, where let's say they need $14,000 to bring to the table to get the deal done, I'll say, okay, you bring 10, I'll give you credit for 4, but agree to my price. So this way, basically they're paying me the price that I want, but their bank is financing the $4,000 for them over 30 year, over 30-year loan or whatever loan term that they have. So, and this helps me get the deal done. They have limited number of cash. They're willing to pay a bit higher price for that because of the ability to get credit towards closing costs. Anybody else has any questions, comments, anything? Okay. All right. So yeah, based on these expenses is how I come up with my maximum purchase price that I'm willing to pay for a house and still be able to make a profit. And so this is the formula that I use. Very simple. ARV, after repair value, times 70% minus repair cost. It's just as simple as that. It's nothing complicated. So for example, a house that I'm looking at is going to sell for about $100,000. And I know from my contractor bids it's going to cost me about $25,000. So my maximum purchase price would be $100,000 times 70% minus $25,000. So I would still be able to make profit if I can get the house at $45,000. What about you guys? Would you guys use something similar, or you guys have a different spreadsheet that you guys use?
Well, why do you use 70%? Can you explain that? I don't know why, but.
70, I mean, honestly, when I was doing my research, that's basically the 30% that I have. That covers up for my profit, anything that goes wrong, any holding cost, any financing charges. I mean, in my case, I'm using all my cash, so there's no finance charge. So that, I'm basically giving the finance charge to myself and still be able to make enough profit. My goal at the end of the day is if after paying all the costs, I approximately end up making 15% of the final selling price. It's roughly what my average is. So if I end up selling this house for $100,000, approximately made $15,000, but because I'm not using any finance charges, I include that in my cost, even though I'm not using it, but I pay that to myself to come up with that number. But what about you? What formula do you use? How do you come up with what you want to pay for a property?
I'd like to make $30,000 on a property, but it doesn't work that way, but, I'm serious. In your 70%, you're talking, 30% is your profit less other expenses. You gotta consider maybe 10% of that goes towards, closing costs,
Closing cost and
Closing costs, commission, buying and selling, and closing costs, buying and selling.
yeah, that's all factored in the 30%.
Okay.
So if you were if you were financing the property, like roughly the 10% would go, like you said, would go towards closing costs, commission, and if you're giving any credit to the buyer. Approximately the other 5% goes towards your holding costs, utilities, taxes, insurance, and also your finance costs. So, and then you would be left with approximately 15% of the final selling price is what you would be left with. I mean, instead, like you said, I mean, you would like to make $30,000 in every property, but obviously number goes up and down. If you, I mean, for this property where I can sell for $100,000, I would be okay with $15,000 to $20,000 worth of profit. But if I'm buying a property where, like we're looking at a house in Cherryville now, and where the after repair value is $200,000, so I need to make at least $30,000 to, to have my money worth for the rate of return that I'm looking at. Anything less than 30,000. In this case, 30,000 just comes from the 15%. Just 15% of the final selling price is what I want to make. If it's anything less than that, then I look at other opportunities. Just as simple as that. What about some of the other flippers? What are you guys using as your criteria to come up with the purchase price? Just nothing? Okay. Right. This is a real example of the flip I did this year, where I already had a buyer lined up who wanted to buy a property as an investment, and they wanted for something about $50,000 where they were looking to hold it as a long-term investment. So they wanted to pay $50,000, and the house that I was looking at had a repair cost of $8,000. So I did $50,000 times 70% minus $8,000, and that came up to $27,000. But the actual purchase price from negotiation ended up being $24,000. If my maximum purchase price is going to be 27, I start with a number at 20, going back and forth. We agreed on a number of $24,000. After deducting for all the expenses, the repair cost, any utilities, lawn maintenance, taxes, there was a profit of $17,550. There's an asterisk for no sales commission because it was never listed in MLS. I already had a buyer lined up, so I never had to pay the commission. So my profit was a little bit extra in this case. Any questions so far?
Rashaad, how do you go about getting your ARV?
How do I go about getting my ARV? It's everything from MLS, from other properties that are selling in the area. Like this one was a 2-bedroom, 1-bath in Hammond. So I looked at what the other 2-bedroom, 1-bath are selling for. One's fixed up.
You're going for what they're selling for, not for what they're listing for?
Yes.
And you work with a realtor to determine that?
Yes, correct. A lot of the houses that, sorry, go ahead.
How would your realtor gotten paid in that scenario then?
In this case,
Yeah.
I mean, I bought the property through him.
Oh, okay.
Right.
So,
Right. I mean, we've done like 40 deals this year, so I don't think he's complaining, right, man? He's actually sitting in the room. So, he understands the business model where most of these times, I should say every flip or wholesale that I've done, it's not gone on MLS. I bought it and then already have a buyer lined up. I only buy if I have a buyer lined up. I did a closing this afternoon where I already have a buyer lined up, just waiting for the house to be finished, and then they're going to buy it. It's going to be pretty similar numbers to this one, maybe a few thousand, 2,000 plus minus, but pretty similar to this. So it's not going to go on the market. Already have a buyer lined up. The purchase agreement is ready. They're waiting for the property to be ready, rented out, and then they're going to take it from there. Any other questions?
Most of your flips are those from properties in the MLS that you're just making offers that you need to work, or what's the buyer situation that?
Penny, how many have you done for us? Like about
The MLS, probably about,
mostly
about 30, 35.
Right.
Probably have a handful, if not more, that were just side deals we were able to put together.
We just got one under contract today, actually
yeah.
yesterday in Gary, and then we're working on another one in Hammond. They're both never listed on the market. One of them was listed on the market 2 years ago, but it was off the market, and then we came in contact with that, and then we're making an offer on that. Hopefully we'll get that under contract.
For the numbers that work for you, how many offers do you find that you have to make about on MLS properties to get one accepted?
Quite a number of them.
Right. So maybe we get like out of every 10 offers we make, 2 to 3 offers, maybe 20-30%.
Oh, really?
Is that right?
I'm sorry, I was talking.
For every 10 offers, about 2-3 offers we get accepted.
Yeah, on average, so about 20%. Yeah.
What about you guys? Like, what are you guys noticing? Like, for I know wholesalers make a lot of offers for one to get accepted. Is that what you guys? I know you guys wholesale. Is that what you guys are noticing? Making like 100 offers get.
If I make like 15 offers and I get more than 2 accepted, I offer too much.
Okay. Yeah.
That's my opinion.
Right. Are you doing mostly MLS, non-MLS?
I'd say most of them are on the MLS. I have 2 right now that are just buyers looking to, or owners looking to sell, and they want to be.
We put out signs out and we get a ton of freaking calls
Okay.
for people. It's just-
Okay. What area are you guys mainly doing?
What's that?
What neighborhoods are you guys mainly doing?
They come from all over, but we try to nitpick where we want to actually do it. Because funny thing about Gary, it's like one we have this son in Rutledge we're working at. We're on one block on either side looks like a war zone. They look like Leave It to Beaver. I mean, it's like their neighborhood is all perfectly manicured, they're all nice looking buildings or houses.
Right.
But on either side of them are just like burned down shacks.
Right.
So it's just we're really trying to figure out, okay,
Sure.
can we make our money here? What's this particular small community like compared to everything else around it? How do you base?
Right.
Focus on the south and the west side.
Okay.
That's where we focus.
But are you mainly focused on in Gary or like other areas also?
Well, my most active buyer is in Gary right now,
Okay.
so
Okay.
I'm looking mostly for them.
Okay. And how long do you generally, do you do back-to-back closings or they give you assignment fee? How do you?
It depends. The one that we are closing on next month is a HUD property, so we have to do a double close. We try not to do that if we don't have to.
Okay. I mean, yeah, you know, this way you save the closing cost.
Exactly, and then I don't have to go with the closing.
Okay.
Just collect my check.
And that's probably like one of our biggest things, we have investors who we are potentially buy for, and then we get something locked up, and then like, oh wait, we're kind of busy this month, so we don't want to purchase the property. So then we're stuck holding the
Okay.
contract, trying to get rid of it.
Okay. But how do you guys come up with, what do you guys look at? What's your criteria for buying a property?
It's based on what my buyers want, but usually if it's single family, at least 3 bedrooms, 1 bathroom,
2-car garage.
$10,000 less rehab, 2-car garage, nice neighborhood.
So less than $10,000 worth of rehab?
I mean, guesstimation, obviously, once you get in there, you might find different numbers, but yeah, you try to, that's what my buyers want.
Okay.
On a
Okay.
wholesaling perspective, personally, the house that we're gonna do a flip next month, and that's $5,000 rehab?
Yeah, 5,600.
Yeah, something like
Okay. And how much are you guys buying that for?
that. 53. ARV is in the 80s.
Okay. Awesome. What about other wholesalers? Like, how are you guys coming up with your numbers? What issues are you guys running into? Anybody?
I have a question in regards to dealing with houses on the MLS.
Okay.
Aren't you, you're cutting into your pocket because you have to pay the agent that lists the MLS, do you not?
Right. I mean, the listing agent gets
Yes.
commission, and
So
you know,
you're cutting out the profit by paying what's the commission, correct?
the seller pays the commission, and then that if the property is listed on the MLS, then the seller is has to pay commission, and then you know, the buyer gets half of it, and the seller gets half of it. Is that what you were trying to get to? Yeah, I mean, there's no other way, and obviously, I mean, you know, the properties that we're buying, they're not. I mean, we're starting to look into some higher end properties in Munster, Sherwood area, but up until now, we've been buying a lot in Hammond, Merivale area, so it's not high price property. So, you know, we're not talking a lot of money. Like the closing we did today, you know, it was like $1,500 in commission. That was split between the buyers and the sellers agents. So it's not a lot of money that, you know, agents are making, but it's a lot, you know, they do a lot of volume. Like we've done about 40 deals this year, so, you know, they have like, on average 1 deal closing with us per week. So that's how, you know, we make a little bit of money. But on the higher end stuff, like the flip we're looking to do in Sherwood, that's not going to be an investor buyer who's going to buy, that's going to be an end buyer, a homeowner who's going to buy. So our agent would get commission on the buy side and also on the sell side. So, Anybody else has any questions, comments?
Yeah, on these inexpensive houses you sell, how do you have that pocket list of prospective purchasers without putting it on the MLS?
For the deals that I'm doing right now?
Yes, you and the realtor, you say you don't buy a house unless you have somebody to purchase it.
Right.
Well,
How do I find the buyers?
yes.
I have investors who are looking to invest. Most of these are overseas investors. Some of these are out-of-state investors. They have money to invest, they're looking to invest, and they basically tell me, okay, this is what I need, and can you get me, this is how much I'm looking to invest. This is the rate of return I want to make. If they want to make 10%, and if I can find something that's going to make 15%, so basically the 5%, I keep that. I increase the price so that their return ends up being 10%, and whatever differential in prices, I keep that. So I won't buy anything unless I have a buyer lined up. I know you had a question.
I was just gonna say about the MLS with the realtor commissions, we usually, if it's listed on the MLS and our realtor is bidding on it for us, then we just factor in 6% commission on both sides, 3% for each of those when we're doing the numbers. So if you find one that's not on the MLS, but your realtor can handle it for you, then it's 3%. Something like that, and that's how and then you can tell if the deal is still on.
You mean when you sell it?
Well, if you are like trying to run the numbers before you bid on it, trying to decide if it's gonna be a deal, I always add in the 6% realtor commission, part of the holding cost, part of your formula before
Right.
you bid on it, so you know whether or not it's good.
But you say realtor deals you're selling to other investors?
Yeah, on the wholesale end, we're looking to buy and hold as well. But
Okay.
if we don't have the money, and we've got a good deal, then we'll wholesale it off to our other buyers.
Okay.
That when it fits in their numbers.
Okay, that makes sense. Alright, so wholesale, the things that you need to know before you wholesale a deal is the buyer. Before you wholesale, go out, get a property under contract and think you're gonna make a profit. Get a list of buyers, have a list of buyers who basically tell you this is what I want, instead of trying to push a deal on them, saying, hey, this is what I have, it's a great deal, buy it. It's always better to always have a list of buyers. I have 15, 20 buyers. If I find a deal, I know that one buyer or the other is going to pick up a deal if it makes sense. If the numbers are good, they will buy a deal. So definitely the most important thing about wholesaling is have a good number of buyers who are ready to buy if they get a good deal. And then finance. If you're going to do back-to-back flip, where are you going to get the money from? Are you going to use your own cash, or are you going to borrow it from someone? If you're going to borrow, how much the cost is going to be? You have to factor in the cost also. I'm going to go back to you guys. Are you using your own cash, borrowing, or if you're borrowing, what's the cost?
We have our own money, but we also use hard money.
Okay.
Banks don't really want to play ball
Right.
with a lot of things.
A lot of shots at
Especially if you're.
But are you doing hard money for wholesaling?
I don't use hard money for wholesaling, I
Okay.
use our own money for wholesaling, but for the flips, we'll probably, depending on the numbers, we use hard money, and some of the buy and holds, we'll use our own money.
Okay. Okay.
It really depends on the numbers.
Anybody else who's who's borrowing money for wholesale, or wholesalers, are you using your own cash? You're doing back-to-back, or just assigning the contract? Eric, we'll pick on you. So for the wholesale deals that you have, are you gonna assign the contract? You're gonna do back-to-back?
Probably sign the contract.
Okay, and then you get your fixed cost, profit out of it. Okay. Alright, so based on that, so after you figure out how you're gonna finance the deal, if you're gonna use your own money or you're gonna borrow money, the next thing you have to do is go out and look for a property. You have a property under contract. The next thing is, you have the buyers, you have the money. The next thing is, how do you find a deal? A lot of people, what they do is they put on signs, we buy houses, yellow signs with black, white. Sorry, go ahead.
I actually have a question about what you were talking about earlier.
Okay,
So you're
yeah.
saying you always have a buyer lined up.
Right.
If you took that property and put it on the MLS and advertised it as like a turnkey investment property,
Right.
would you have trouble selling it? Is it like real important to have that end buyer in mind? Or does it just save you on commission?
See, the thing with, if you buy something off MLS, let's say if you have a property, it's a turnkey property, great condition, tenant has already moved in. You're trying to sell it to me, say for $50,000. I go on MLS, I tell my agent, to find out how much the property last sold for, so I'll find out how much you bought it for. Say you bought it for $20,000, and I'll see the picture, you're trying to sell it to me 50, like, it doesn't make sense, it's a lot of profit. If I'm a full-time, if I'm not a full-time investor, that's something I might look at. But if I'm doing this full-time, I'll say, hey, instead of buying this property for $50,000, I can just go out, get a deal myself for $20,000 to $25,000, put another 5 to 10 into it, and get that same property for $30,000 to $35,000. I mean, I've not tried listing anything on MLS to see what kind of potential I'll get out there, because these deals are pretty much strictly investor deals. Where we buy it, we rent it, we even guarantee rental for first 6 months. If it doesn't get rented, or if it's rented and then it moves out for whatever reason, we'll cover the rent for 6 months. Or if anything comes up in the first 6 months, we'll cover it. But I've not tried anything listing on MLS. I'm sure there probably won't be enough investors out there. I mean, just you'll end up sending it to an investor. If invest in a local area, they would see the potential of just going out and buying the deal themselves, and buying it directly from an investor who's already done the work on it. So, are you guys selling it to out-of-state investors, or people who are local or all over?
The property we have that we're closing on, that we're wholesaling,
Right.
is it's a flip for an out-of-state investor.
Okay.
So we're gonna wholesale them, and they're gonna flip it, and then I think they're gonna sell it. Yeah.
Okay. Yeah, that makes sense. So yeah, once you do the marketing, put your signs out there, yellow signs with black writing, you buy houses with your phone number, start getting calls, then you go out and look at these houses, and then you start looking at, if you're wholesaling a property, more likely than not, you're going to wholesale it to somebody who's going to buy it either as a flip or either as a rent-to-own. And then based on what your investor is looking for, you calculate the profit margin. The profit margin can't be too much, because at the end of the day, the investor wants to make some money. They don't want to buy a deal where you're making $15,000 just wholesaling a property, and the investor is going to make $5,000 for doing all the hard work. The way you calculate the numbers for investors is, we calculated the maximum purchase price for a flip, shows ARV times 70% minus repair cost. So your wholesale maximum purchase price would be what you would pay if you were flipping a deal minus your wholesale profit. So let's look at an example to make it more clear. If you, after the fair value, if your buyer is going to pay you $65,000, and the house is going to sell, house is going to need about $10,000 worth of repair, you want to make about $5,000 worth of profit, you would calculate the maximum purchase price that your flip buyer would be willing to pay, which would be $65,000 times 70% minus $10,000, which is $35,500. That's what your flip buyer would be willing to pay to still be able to make a profit for all the work he is doing. And I calculate that I want to make, for my wholesale deal, I want to make at least $5,000. So I would take the maximum number that the flip buyer is willing to pay, deduct my $5,000. So if I can buy that deal for $30,500, I know I'll have the buyer willing to pay $35,500. Anything, if I can get any more discount than $30,500, that's extra profit for me. Other wholesalers, are you guys using the same formula, something different, or you guys have a fixed number that your buyers are willing to pay you? Anybody?
We've had a couple of instances, especially in Gary, where we look at the ARVs,
Right.
and it's come out, say, $50,000.
Right.
So we go through the entire calculations and $30,000.
Right.
So we come down to the point where we subtract all that stuff, it's still lower than what they're asking for, or still higher than what they're asking for. So it comes down to say that, after all the calculations, that we shouldn't offer any more than $14,000, $14,500. But then they're selling to you for $10,500.
Right.
So now you're still $3,000 over what they're even asking for.
Right.
So, that's the kind of problem we've been coming into.
So your maximum purchase price that you guys are going to pay is 14,500 and they are asking 10,000.
Yeah, so it's already below
That's
that.
just an example.
It's just an
Right.
example of walking away.
But yeah, I mean, yeah, in Gary you would run into.
Yeah.
So
So
are
you
you
can't
gonna,
find someone to buy them.
but yeah, I mean, that's, right. I mean, that's the thing with after the fair value, I mean, honestly, it's what the buyer is willing to pay. You know, you can run all your numbers, you can look at everything and say, hey, I think this property is gonna sell for $65,000, $70,000. If you don't have a buyer for it, that doesn't mean anything. You know, you could list it for $1 million, but you know, you have to be able to sell it. If the actual value, if the buyer is willing to pay only 30 for it, that's your market value, you know. You can only look at, when I calculate ARV, we only look at the last 6 months of actual sold for similar houses. If I'm looking at, if, you know, we looked at a house in Cherville, 3-bedroom, 2-bath. So when I was looking at comparable, they were all 3-bedroom, 2-bath that I'm looking at. If it's a 4-bedroom, 3-bath, then it's not a good comparable for me because, you know, a family that wants to buy a 3-bedroom is going to have completely different needs from a family that wants to buy a 4-bedroom. So they may be willing to pay a lot more per square foot for the 4-bedroom than for a 3-bedroom. So, and if the house has a basement, if it's a slab, so you look into all these things and you can come up with the best estimate based on all the criteria. It's the exact same house, but then if you're going into the winter months, obviously the cost is going to, I mean, they're not going to be enough buyers, and the interest rate going up, so you won't have enough buyers for the market. So you factor that in also, so you might reduce it by another 3-4% just to give yourself enough buffer if you want to make a quick sale, especially if you have hard-money lenders, you know. Generally 6 months loan where you have to pay them out, so you really want to make sure that if you're doing a flip, you have a good team in place, that, you know, as soon as you buy a house, you send somebody in, they can start working on it, get out of the house as soon as possible, put it on the market, see if you can find a good buyer. And you can, hopefully you can get somebody at the price that you're asking for. But yeah, in this case, so my maximum purchase price that I calculated was if I can get the house for $30,500, I'll still be able to wholesale it to my buyer for $35,500 and be able to make $5,000 profit. In this case, we actually ended up getting the house under contract for $28,000, and then the profit, instead of what I calculated at $5,000, it ended up being $7,500. So, but in this case, if the buyer, if the seller won't take anything less than $30,500, we just strictly walk away. It's just, if the numbers don't make sense, just pass on it. If, you know, there are plenty of other deals out there. If this one doesn't work, there will be another deal that you can always work on. Rental income. So this is where I got started, and I think at the end of the day, all the investors out in this room, this is where they want to end up. You know, a lot of people start out with wholesaling because you don't need a lot of your cash, or they're going to split using hard money lender. And I think in the long term, everybody wants to end up owning rental properties so they can get the passive income that everybody wants. But there's some misconception about cash flow. Cash flow is just not rent minus taxes, minus insurance. Sorry, I have insurance twice there, but yeah, it's just not simply rent minus taxes, minus insurance. There are plenty of other expenses that go into it. You have to factor in vacancies. Vacancies in this business will absolutely kill you. I mean, you can buy all the houses you want, but if you have 3-4 vacancies at the bad time and you have all the mortgage due, you could just go in foreclosure like anything. That's what happened. You know, this is why we had the whole real estate bubble that busted. People kept buying all these properties. You know, they got more cash than they should have on these properties, over leveraged, and before you know it, they have vacancies. They don't have money coming in, they don't have enough money saved up for a rainy day, and then they end up running into foreclosure. If you're going to manage the property yourself, or if you're going to have a property manager manage the property, then you have to factor in at least 10% for monthly rental that's going to go out that they're going to charge. Plus, I assume for my vacancies that every unit is going to have at least 1 month of vacancy. If I don't have it, it's great, but it's good to factor for that, because if you have a vacancy, like right now I have 2 vacancies, and one of them has been vacant for 3 months. So it was rented out for 3 years, but once the tenant moved out, we did all the work, but we're having a little bit of issue getting it rented out, so it's been vacant for 3 months. So it ended up being average of 1 month of vacancy for every year of rental, so it's definitely very good to at least have factor in 1 month of vacancy. And if you're gonna have a property manager rented out, then you have to factor in the 10%, plus generally property managers charge anywhere from half month to 1 month full, 1 full month of rent to rent out your unit. So 10% plus whatever they're gonna charge to rent out your unit. And then obviously you have monthly repairs, maintenance expenses. You need a really good plumber if you're gonna own a rental property. There's always something going on with plumbing issues. And another very important thing, one of the most important things is you want to save up for future capital expenses. If you're looking to buy a property, hold it for a long period of time, you want to have some money set aside for a new furnace, for new roof, new siding. To me, it seems like every year I'm putting in a new roof on some property, new siding, new furnace going on. So it's good to have that money set aside instead of saying, oh, I'll get the money out of cash flow once that expenses comes up. Before you know it, you need a new roof, but you have some vacancies, you don't have enough cash where you can pay all your expenses, your mortgage, and still have money set aside to pay for the roof, the furnace, or the siding. And then that's going to kill your vacancy even longer. So definitely very important that you set aside 10% for capital expenses. I do roughly 10% of whatever gross I get. I set aside for any future expenses, and I only use it if I have a capital expense. I don't use it for day-to-day repairs. If I have a plumber call, I'm not going to touch that capital expense. I'm going to take it out of my cash flow because that's an operating expense. But for future capital expenses, I only use it if I need a new roof, furnace, or a long-term expense. And then utilities. So for the unit that I have vacant right now, I'm still paying the gas, still paying the electric, still paying some water. So those are the minimum expenses. Even if it's 50, 60 bucks, you still have to pay that every month. So the longer you have that vacancy, the longer you have to pay those expenses. And then obviously, I'm sure a lot of people have run into this issue. If you have a vacancy, you always have the issue of people breaking in, stealing your copper. That's just, we have a tenant, we have a house in Meadowville where the tenant wanted to move in last week, but we didn't have the house ready, so we got the house ready this week. They want to move in on Saturday. So we go there yesterday, we found out somebody broke into the house. They kicked in the door, stole the hot water heater, so that was another $750 that we had to spend. So these are the expenses that you have to plan for. Even you can do everything you can in your control, but these expenses are going to come up. Somebody is going to steal your copper if you have it in the house. Somebody is going to try to break in and see what you have. This one house we bought in East Chicago with a brand new boiler, spent $2,800, somebody broke in, stole the boiler. Go ahead, Joe.
Why would you not put in an alarm system then?
Why would we not put in the alarm system? It's really for cost. Now we're getting to the point where, we have a lot of properties. It seems like every month somebody's breaking into one of the vacant properties. So now we're thinking of maybe getting an alarm system for some of these properties. But another thing is, a lot of our properties are multi-units. So if they go vacant, I've had actually ADD come out, give me a bid, and they were going to charge anywhere from $150 to $200 per month for a multi-unit, and it just didn't seem worth the cost. But I know we had a vendor, I think it was last year, where you can move your security system from one house to another. Is that what you do with your house?
No, since I have all my single-family homes and I keep them long-term,
right.
The money that I spend on the alarm system,
right,
is cheap compared. You're talking about spending $2,800 on replacing the boiler.
Right.
Well, I look at that as more of an insurance plan.
And how much are you spending per house?
$40 a month.
So you keep it even if the house is rented, or you?
No, I pay for that. Yeah. I pay for that all the time.
You pay for the, sorry.
There's like
There are a couple of vendors out there, one's like Simply Safe.
Right.
The hardware is like $400, but it's like $25 a month to monitor it, and it goes over like cell towers. So you can move it from one house to the next.
Right.
Sorry, what is it called?
Simply Safe.
Simply Safe. And it goes from house to house that you would.
Yeah, you can, like when you're done with the house, you can.
Simply Safe is
Oh,
what
you're renting it, so they don't break it.
Yeah, pretty much, yeah.
And also insurance give you additional peril.
Yeah, we do have insurance, but, you know, we thought about, no, we thought about running, running a claim on the insurance. I mean, our deductible was gonna be $1,000, but if we did that, our premium was gonna go up on other properties, so we thought, okay, it's not that big of an expense, very much worth the cost. Obviously, I sent out an email to
One without the other.
I'm sorry?
One without the other, in other words, the person to go ahead and
Exactly.
pay insurance, pay
Exactly.
deductible, and then you don't have to claim it.
Right, yeah, so you look at cost benefit if it makes sense. Like the one house where I sent out an email to and I see like a drunk driver drove into a house, just made a huge hole. Obviously that's gonna end up costing a lot of money, so we're definitely gonna move forward with insurance. It's gonna be anywhere from $15,000 to $20,000. So over there it makes sense because that's not something we would wanna, carry and just for the risk of increasing premium, we're not gonna pay out of pocket. But if it's $2,000 to $3,000, we generally end up paying it versus running an insurance claim. But the house where just a drunk driver drove right into the house, we had the house that was gonna be rented out November 1st, but it happened in mid-October. And then it's gonna cost anywhere from $15,000 to $20,000, so we're definitely gonna run an insurance claim. We tried to go after the owner of the car, but they were uninsured, so we didn't get anything out of them, so it has to hit our insurance company. And then a lot of my properties are multi-unit, so I haven't come up with a good system to divide the water, sewer, and trash bill, so I pay for that. That's about another roughly $100 per property that runs, so you have to factor that in. I don't buy any multi-unit where I'm going to be paying the utilities, even if it's a really good price. I do not buy anything where I have to pay utilities. I only have one building. It's a 2-unit where there's only one heating system that I bought. But the tenants have agreed that both units are 2 bedrooms, so they've agreed whatever the bill comes, they pay half of it, and I've given them a free washer and dryer, so they get a benefit. I mean, they don't always like the idea of just whatever the bill is, that they have to pay half, but I said, okay, I'll give you, I'll cover the hot water, but you have to pay half of it, I'll throw in a washer and dryer. But I don't personally buy anything unless I can, there's separate gas meters, separate electric meters, but water is something that I have to pay out of pocket on the multi-unit. And another expense that not a lot of people account for is accounting and legal. That's something, unless you do your own taxes, if you buy a rental properties, you're probably going to hire a CPA, they're going to charge you a little bit more for the accounting services. If you use a bookkeeper, that's extra legal services. So you have to factor those in also in your overall cost. And then rental registration, and also a hot topic in this group. So, I mean, in East Chicago, Hammond is $80 per unit per year. So that's a big cost that you have to factor. If you do advertising, I don't know if anybody really uses other than Craigslist in this area. But if you are using something, a paid service, then you have to factor that into your cost. Supplies, if you own rental properties, you're going to be using printing some stuff, so you have to factor for those. Lawn maintenance, snow removal that you have to pay for. Any other expenses, so the landlords that you guys look at that I may have missed there.
I just wanted to throw something out there. Nick still has an extended service plan for heating, air conditioning, and outside sewer line maintenance. They're each one are like $10 a month. And so when you're like out on vacation or something, if the heat goes out or if the sewer line busts, you know, they just call an 800 number, and rather than you trying to find someone at the last minute or at 2 a.m., you know, they just call an 800 number and then NIPSCO takes care of everything.
If there's a, if it, like,
If the furnace goes out, NIPSCO has everything like plumbing and all that, but the plumbing in my house is new, so, you know, but like the furnace, the air conditioning, outside sewer line, NIPSCO will pay if the sewer line, like underneath the house busts, and they'll cover up to $6,500.
for the sewer line?
But that is for the person that's living in the house,
Yeah.
for them to pay an additional.
No, I just pay it, because I just don't want to deal with the headache if, at 2 a.m., if you have to send someone out there to fix the furnace, you're gonna be paying a premium.
But that's for, like, are you talking about like for a rental
Yeah.
property? And you would pay the additional,
I just pay the additional $30, you know.
$30 per unit, per property?
It would be per unit, it depends on like if the building has one furnace for the whole building, or if it's
Right.
like each.
So they would do $30 per furnace?
Yeah, like if the furnace is like $9 a month, the central air is like $10, and then the sewer line for the entire building, or however many sewer lines you have, is $7.
If there's a leak, they would cover it? Anybody else use that service?
I've heard of it, but I don't
Yeah.
work on a rental, that's why I'm curious
Right.
to know exactly, if you can explain it just a little bit more, and you're saying for a rental property.
Yeah, like let's say
But
like,
you as the owner, not as the renter, right?
Yes.
Would pay that.
I just pay it, just
Okay.
because, like for instance, like the air conditioning went out, and
Okay.
if they're in the first heat wave that we have in the summer,
Mhm,
I just called NIPSCO and they sent someone out there. I
Okay.
didn't go through the yellow pages
mhm,
or,
mhm. I understand. Mhm.
And they would fix it for a cost?
yeah.
Anybody else heard of this service, used it?
I didn't catch the name.
It's from NIPSCO, it's from NIPSCO. As a regular homeowner, you can ask for that insurance, but he's talking about as a rental property that he would own, he would pay the additional just automatically, so that he doesn't have to worry about it and have, like you said, the headaches of having to buy or find a plumber, somebody from the sewer, that you would need additional.
Yeah, I've not heard of that, so that's awesome if they cover rental properties also. Wait.
I've heard of it, I just didn't know how that worked. I thought it was just for a regular
I mean,
property owner.
it is,
Right.
and it's for a regular property owner as well, but.
Okay, okay.
But I mean, if from my experience, the tenant can break something, they will.
That's true.
Go ahead, Joe.
Yeah, NIPSCO, it's called ESP repair.
Okay.
You can just call them, they'll send out a letter every so often offering it to you, and, but that's only for the gas, NIPSCO related items. If you want water lines and sewer, that's through the Indiana American Water.
Okay, but that's in Gary, like in East Chicago
Yeah.
and Hammond, they have their own water service, so they won't cover that.
I only know about NIPSCOs with ESP and the American Water.
So if the furnace breaks down, they will cover it?
I haven't read all of that, I just know that with NIPSCO, I do know about the lines. I've never called in, I just know it's called the ESP repair.
Okay. Go ahead.
Actually, if a private company bought out that portion of.
Right.
So it is a private company now, so they offer everything like inside electrical wiring, inside telephone, inside plumbing, exterior plumbing, heating, air conditioning, they even cover the hot water heater, inside gas lines. I mean, it's you can buy whatever you want from them. I just bought the stuff that I needed.
That's awesome, yeah, I wasn't aware of that, I'll definitely look into that. It's called ESP service, you call the 1-800 NIPSCO number?
Yeah, it's 1-800-4NIPSCO.
Okay, that's great, yeah, I know that's, thanks for that, I've not called them. I need a new furnace, I have 2 furnaces that I need replaced, I'll call them, get the insurance and say, hey. Let's go ahead and do that. One thing, if you're buying a multi-unit, please call the city where you're buying, confirm the zoning. I've run into issues where I've looked at 6-unit building, 12-unit building, and they were zoned as a single-family house. Yeah, they were in East Chicago. What the city of East Chicago and the city of Hammond says is that if the property is a 3-unit, but it was supposed to be a 2-unit, a single-family house, they would grandfather the property if the property stays rented. If the property goes vacant for more than 6 months or a year, depending on the city, then you lose the eligibility and it goes back to the single-family house. So you gotta be very, very careful. A lot of properties, especially multi-units that you buy in East Chicago, Hammond area, they've been sitting vacant. Like I looked at a 6-unit building and a 12-unit building. They both seem great. I called the city and they're like, nope, that's a single-family house. Like, these cities, at least come out, you should come out and see the building, you know, how huge it is. Go ahead.
We had the same thing, we were looking at a 12-unit apartment building. It was in East Chicago.
I think I know the building, 139?
Yeah, something like that. It was like, we were looking, we were looking at just completely redoing it.
Right.
And so we ended up trying to talk to the city and like, well, you can no longer be an apartment building because there's not enough parking.
Exactly, you need 1.5 parking spot for each unit.
I remember it's Paulina Apartments, I think it was originally we were looking at.
139th and Fun.
Yeah, so I called the city and I was talking to him about it and I was like, hey, you know, how can we get this still to work? And he's like, well, the city is set up is, the reason why they're doing it is because they're trying to go the way of Hammond. They're trying to get rid of renters. They want people to buy the house so they can get the taxes from it.
Right.
So I'm like, well, what if we turn them into condos? He's like, oh, I never thought of that.
Right.
I'm like, really?
Right.
So,
There's no parking.
Yeah, it's,
Tear down a building.
you know, but to be fair to them, I know the building you're talking about, it's right at the corner, 1039 foot. I mean, let's say if you bought it, would you really want to keep it, you know, with the parking nightmare that you guys are gonna have? I mean, you know, that you have a 12-unit building with absolutely, that has no parking whatsoever, then you have, you know, I think it's 12 one-bedroom units, you have people, you know, who move in, where are they gonna park their house?
right.
And, you know, that's gonna cause some sort of issue. So that's why you have to be very, very careful. I mean, it's a 12-unit building, the city says, no, it's zoned as a single-family house, you have to keep it as a single-family.
As far as the zoning laws are concerned, does each municipality have a pamphlet on it or maybe a website that you look up?
I would call the city. We run into a lot of issues with East Chicago and Hammond. What I would do is just call the city, speak with their building department, and just give them the address, tell them you're looking to buy this building. Can you please tell me? I mean, East Chicago, if you go in there, if you go into the building department, they have a map. So, and they just simply go by the area. I mean, they go by block. So I have a picture of that on my phone. So if I'm looking at something, I'll just pull up the picture and say, oh, you know, it's zoned as a commercial, single-family house, or 2-unit, 3-unit, and then, you know, if it's zoned correctly, then I move forward. If it's not zoned correctly, then it's just not a deal. I mean, I'm not going to buy a 12-unit building and then keep it as a single-family house.
Do they show the zoning on the county assessor's office? The taxes?
No, I mean, I call the city. I would just call the city, and if they do confirm, I would get something in writing. Just get something in writing so that if down the road they say, if they made a mistake where they should have said it was a single-family house, then you can go back and say, I have something in writing from you, then, you know, they can argue that. Anybody else who's run into that issue?
A project I'm currently working on right now, trying to wholesale this building in Hammond, actually. I would suggest going to the city in person because we did call and speak to the building department. Oh yeah, it's zoned as a duplex, you're good to go.
Right.
And then, you know, when we were getting ready to do the final work on it, we later found out that we were given misinformation, so it doesn't hurt to double check and triple check because that just killed the deal. I mean, there's 2 separate units, you got 2 gas meters, 2 electrical meters, and so it's like the units are clearly divided, that the building is built as a 2-unit.
And one thing in Hammond is, even if
It's a pain.
the building has been registered as a multi-unit in past years, it doesn't matter. It's,
So you have to do your due
right.
diligence.
And get something in writing. I mean, it doesn't hurt to get something in writing from the city, then they cannot say, oh, you know, we made, you know, then they say, oh, we never said that. They have something in writing for you. Many people looked at that building, 6-unit building in Hammond, that's sitting vacant now because it's zoned as a 3-unit or
They wanted it as a 3-unit.
They wanted
It's a
it.
huge 3-story
Yeah.
building.
And it's been,
Look at several in Hammond.
Yeah,
What's the address?
it's on 158th, I don't know the miracle.
it's right at the border of East Chicago and Hammond.
Yeah.
It's a nice brick building, 6 separate meters for
Like
gas,
no parking
for
space and
electric.
everything.
all parking spaces, everything. And it was registered as a 6 unit like, for at least like last 7-10 years at least. But that did not make any difference. Now the building is sitting vacant. You have to spend a lot of money if you're gonna convert it back. You cannot even say, okay, I'm gonna use the 3 unit only, leave the other 3 unit vacant. You can't even do that. You have to convert it back to what it's supposed to be. And at that point, it's just not, for the investor, it's not worth spending all that money to get it back converted to, if it's a single family house or a 3 unit. One thing you should like in Hammond, if you're buying a multi-unit, in Hammond basically, the one thing they always look at it, the width size of your lot. If it's less than 50 feet, it's going to be a single family house. Unless you can get something writing from the city saying that, okay, it's a 2 unit, we'll allow it as a 2 unit, but they basically go by, I've called them enough where they say, if it's less than 50 feet wide, it's supposed to be a single family house. That's just what they say. Anybody else run into some issues like this with the zoning or building department? Another thing, when I first started investing, one thing I did was, because I was not investing in, I wasn't sure of these neighborhoods, I'd never been there, I didn't grow up in these areas. So what I would do is, if I wanted to know if these areas are safe, I would just call the police department. That's what I would do. I would just call the police department, speak with the sergeant. Like in East Chicago, I would call him every single day because I was looking at so many properties. I would call him every single day and say, I'm looking at this property. What do you think is a safe area? He would actually give me the report of that building, if there's been any calls for that building or the houses around it in the last 6 months or a year. And I would just, if he said, okay, it's not that bad, I would ask him if it was your son or your daughter buying this property, would you recommend? And if he said yes, I would buy it. If no, I said that's fine. I'll pass on it too. So that's what I used to do. And then if I got good information, good positive feedback from the police department, I would even go, if I'm buying something, I would even go talk to the neighbors. Anybody, just go to the local grocery store in the area and talk to people. Hey, what do you think of this area? I'm thinking of buying this building. What do you think? Is it pretty safe? And I would drive by after dark just to see what kind of activity there is. Because you're going to be investing, if you're going to be buying a rental property, you would always have to worry about, that you're buying in a decent area where you're not going to get a lot of calls, you're not going to have gang activity, so you got to be very, very careful about that. Like I said, I confirm that the tenants are responsible for their own utilities. I personally don't buy anything unless the utilities are separate. Even if it's a great deal, tenants are paying all the, if I have to be responsible for all the utilities, I just pass on it, I don't buy anything. And then the biggest mistake you can make is, go ahead.
Something I just want to add, that's great for tenants to be responsible for the utilities, but you have to be careful in some areas because if they don't pay the utilities, they put a lien on the house. So it's.
Which area?
Water. Like water and sewer.
I was going to say, except water. Are there any other utilities that they can put a lien on?
I don't know about, but I got a surprise for the sewer.
Oh, wow.
So.
I think NIPSCO follows the social security number though.
Yeah, NIPSCO follows the social security number, but the water the water department, they can put a lien on the house. But with the multi-units that I buy, the water you have to pay for the single family houses, except for the East Chicago ones, I keep the water bill in my name. I get the bill, I scan it, send it to my tenant, and they reimburse me with the rent. But for the ones in Hammond and Maribel, they get the water transferred to their name. And I don't let the tenants move in unless they have NIPSCO and water if they can transfer to their name. If they don't have it, they don't move in. But if they move in, it says on my lease that they have to pay $100 fine for every month they don't get it in their name. So that's because before you know it, unless the tenants are getting utility bill, they're not going to be responsible for that. They're going to leave it it's not costing them anything. Leave the windows open, have the heat all the way to 90 degrees, and then I'm sure that everybody runs into those sort of issues. When I first bought a property, this was my second property, I was still managing myself. On Sunday evening, I got a call from the tenant saying the heat isn't working. And I was new at this, I'm like, oh shoot, I knew I was doing something wrong, this is it, I should get out of it. So I drive all the way from Chicago, I live in downtown Chicago, I drive all the way to East Chicago, and I look at it and the tenant had thermostat all the way down. And believe me, I was so happy. I'm like, thank God it's not a new furnace, a new boiler that I put in. I'm like, I would rather have a stupid tenant than have to replace the furnace. Somebody had a question?
That is why that ESP program is great. 'Cause you get a call at 2 a.m. for something ridiculous like that.
Right.
You just call the 800 number and you roll back over and go back to bed.
I mean, yeah, now I don't manage my own properties. I have a full-time staff that does that. I have a full-time maintenance guy. So, I mean, of all my tenants, I think there's only 1 or 2 tenants that I've seen this year. Some of the other tenants, they've moved in, they pay me rent, and I've not even met them. As long as they pay the rent, I don't care who they are. I've not seen them. If I run into them, I have no idea who they are, because my manager, she manages all that for me.
I'm just saying for people who don't.
Right, no, I mean, that's still a great idea, even if it's like $10 per month, which is nothing. I mean, it's totally worth it, because especially going into the winter month, you do get a lot of calls. Heat isn't working, there's always something or the other going on, with the heating system. So I definitely think that's definitely worth it, for $10 a month. But you would get sometimes a tenant would run into these. I mean, you would get some tenant who's not responsible, would take you for granted. I mean, at first I would, when I was a new landlord, somebody would give me these stories, say, oh, I'll pay your rent, you don't have these expenses. I'm like, okay, just pay me later. But now, if they're 1 month behind, if we're in November, if they haven't paid their October rent, November 1st, they get a 10-day notice. No questions. If they pay within 10 days, we don't go to court. If not, we just move straight to the court, and that's it. Like, if they're not going to pay their rent, that's it. They just go straight to court. A lot of times what tenants would do is they would threaten you, say, I'm going to call the building department, I'm going to call the police department, you don't do this. I'm like, here's their number, just go talk to anybody. I had one tenant in Hammond, wouldn't pay me the October rent, and who hadn't paid me the September rent, and the October rent was due. And I said, hey, what's going on? You haven't paid the rent. He's like, you haven't fixed these. I'm like, unless you tell me something is wrong, I'm not gonna come into your property every day to find out what's wrong, what's not wrong. It's like, oh, you haven't even installed the smoke detector, carbon monoxide detector. I said, read your lease. It clearly says when you moved in, all the smoke detectors, the carbon monoxide detectors were installed. I even gave you a fire extinguisher. If you lost it, that's not my responsibility. I actually ended up calling the fire department. I got a call from the Hammond Fire Department. I spoke to this lady. She's like, hey, the tenants are complaining about having no smoke detector, no carbon monoxide detector. She actually said something which I didn't know in Hammond. She said, by law, you're not required to have a carbon monoxide detector, but you have to have smoke detectors. Which I'm like, really? I said, we just, because we own properties in many different cities, so we go by the least conservative requirements so that we know we have all covered. We just put smoke detectors, carbon monoxide detector in every room, smoke detector in every room, carbon monoxide detector by gas appliances and by the furnace, even if we don't need it, just so that we know have it covered and it's not much of an additional cost. And she said they're complaining that you never installed that. I said, I have a lease. It clearly says they initialed it that the smoke detector was installed, the carbon monoxide detector was installed, and they got a fire extinguisher when they moved in. If they're complaining about it, I can't do anything. That's, if their lease is like your lease. She's like, oh, no, I don't have to worry about it. I called the tenant back, and he's like, okay, but I paid you $300 in cash. I'm like, okay, fine, do you have a receipt? Then he said, no, I paid it to your guy. I'm like, okay, do you have a receipt? And he said, no, I don't have a receipt. I'm like, what do you mean you paid cash to someone, you don't have a receipt? I said, who's going to believe you? He's like, no, I did pay cash. I'm like, let's do this. We'll go to court. Instead of $300, just say you paid $100,000 and you got the property, you paid the cash to him and you got the property. Like, if you pay cash and not getting a receipt and you're telling me why is it $300? Why not say you paid $100,000 and I owe you $50,000 back? And this guy, I'm like, why would you pay cash to someone and not get a receipt? And if you're going to do that, why are you just saying $300? Just say you paid next 10 years worth of rent and you don't owe me a penny. It's just, sometimes these tenants come up with these stories. But first, I would get really scared. I was like, oh, this, if they're going to call the building department, that can't be good. They're going to come in, they're going to find all these issues. But if you fix your property right before you let anybody move in, you don't have to worry about anything. I mean, I own enough property in East Chicago and Hammond where I've gone to the building department. I said, hey, you know, we own these properties. I just want to make sure that we're taking care of everything. And you know, if there's an issue, just call me first before you go out and start, you know, giving us tags or anything. And they're great about it. All they want to know is if you own a property, that you're going to take care of it. I had a tenant in East Chicago. He was moving out. What he did was he had some trash in his place. Instead of doing the right way, putting it in a trash bag, leaving it in the back, he actually dragged the trash can inside the yard. He's just throwing trash from the second floor. He's throwing everything, and obviously he wasn't like LeBron James that everything was going inside. And it was just all over the floor. So the building department, he called me directly. He said, hey, this is what's going on. I know you own other properties, but just make sure you get it taken care of. I'm not going to give you a citation. I sent my guy over. He cleaned everything up, and we didn't get a citation. So that worked out great. As long as you keep your properties in good condition, do the right thing, register them, don't have any units in attic, basement, have all the legal units. There's really nothing to worry about with the building department. If everything is okay, then let them, I mean, if the tenants are going to call the building department, I just say, hey, this is their number. Make sure if they don't pick up, leave them a message so they call you back and you know you can complain about me. And I tell them, I said, you're just one tenant. For every bad tenant you have, I can call 50 tenants to the court and say I've never mistreated them. If they call me about anything, I take care of it. They have my cell phone number, they have my assistant's cell phone number, I give them my maintenance guy's cell phone number. So if there's anything wrong, call us, leave us a message if you don't pick up. And if it's not fixed then give us a call. If you expect us to find out that something is going to be wrong and then fix it, if you don't tell us, then that's not going to happen.
And going back to the building department, can you get them to come out and inspect the property before you bring it out to the tenant?
Yeah, you can, but
Do they charge you for that?
no. I mean, you wouldn't really want them to come in, but yeah, you can call them and they would be more than happy to come out.
Why would not want them to come in?
I mean, unless if it's just one or two properties, I mean, more often than not, if you're starting out, they'll give you some hard time. But you know, I mean, if you've done everything right, if you're gonna fix it up, if you're gonna repair it, then you have to pull the permit, so they will come out, you know, whether you want them or not. But if you fix everything right, you know, then you shouldn't have anything to worry about. But there have been cases where if NIPSCO has been shut off for more than 90 days, then you need to get a city inspection. So this was, I had a 2-unit in Chicago that I bought, had been sitting vacant for more than a year. There's actually a house that I bought, really nice brick building, and it was one of the shows that you see on TV hoarders. It was a house like that, except for the basement, the first floor, second floor, attic. You couldn't even walk in. It looked really nice from outside, the roof looked in good condition. So we rolled the dice, made an offer. When we started we had to use 7 30-yard dumpsters to get everything out of the house. We found everything. We found like grocery bags that hadn't been opened for 15 years. It was absolutely disgusting. We found all different kinds of stuff. So for this house, you know, we scheduled an inspection with the city, and the inspector comes out. For the inspection, they just want to make sure that before they turn the NIPSCO on, that you have smoke detectors, carbon monoxide detectors installed, there's no leaks or anything. The inspector comes out, he said, you know, I have arthritis. I'm like, okay, and it's a 2-unit building, so you had to go up to the first floor and second floor. Like, and he said, have you done everything that you were supposed to? I'm like, yeah, otherwise I wouldn't call you here. Like, okay, I'm gonna believe you, and then just pass the inspection. Yeah, so they do all different kind of things, but as long as you make sure that whatever they ask you to do and you take care of it, then you should be fine. Did you have a question, comment?
Nah, a comment.
Yeah.
You guys are worried about all the smoke detectors and all that stuff. I take pictures of everything before every new tenant moves in. And I usually do it before they get there, in case, like the day before I get there, last time I'm walking through the place, but in case I forget my camera. But date, time, month, I take pictures of everything. I don't hold the camera up each time, but I take a picture of the room, I got floor, ceiling, smoke detector, and I go to the other side of the room, take another picture. Every room, every air conditioner, every furnace. I have fire extinguishers too, I just put them on the counter, snap the bathrooms, I have pictures of everything.
Right,
And I always make sure that I snap a few pictures in front of them, so they know what's going on.
right. No, that's a great idea.
So if you wanna fight, worry about your, oh, they don't have a smoke detector up. Yeah, it's in my lease too, but Judge, here it is.
Right.
You know.
Yeah, what I started doing now is, for the one tenant that I did eviction on, I went and actually made a video. They were not supposed to have any pets in the unit, but they had a cat that was sitting in the front porch. I went and made a video. I said today is whatever, October 15, there's the tenants for the lease are not supposed to have any animals, they have a cat. And then I posted a 10-day notice, so I made a video of that also, so that there's no way they can, argue that. I'm sorry?
There's no way they can argue they didn't get it.
Yeah, they can argue that, so, I mean, if you want, you can send it by certified mail, you can do that, but what I do is I just put it on the door, make a video, say the date, and, I mean, I've never had anybody argue that. Hey, you got a question?
He had already covered it. I was gonna reiterate the fact that, as far as taking pictures of everything, get a picture of the tenant actually standing inside the house. Because I actually have a court date coming up December 13th where, they did like $2,000 in damage, which to me is, extensive, but in the grand scheme of things, it's not bad. And they're saying that their identity got stolen, they didn't live there, they don't know who lived there. But I've got them standing in the living room with a picture, smiling. So I'm actually really looking forward to this.
Really, this isn't you?
Well, that's a big picture.
Maybe you should have it blown up really nicely, Yeah.
No, another, I have a 14-page lease that includes the, it's 14 pages, yeah, it's a pretty long lease. But it includes like 3 or 4 pages of that is where they have to initial, go into every room, they have to initial that when they move in, everything is in working order. That there's no holes in the walls, the appliances, if I provide them, are working, the floor, the paint, everything is in good condition, and it also includes, I'm blanking out, the lead-based paint disclosure that's also in the lease, so they have to initial every single page of the lease, and then they have to sign, and I get a copy of their driver's license and a social security for my record, so they cannot say somebody stole their identity.
I get the same thing.
Right. Yeah, I mean, you never know, tenants, if you run into a bad tenant, who thinks that they're going to try to take advantage of you, just as long as you cover all your bases, do everything legally, then you shouldn't have anything to worry about.
And another hint too, when you have your lease set up, and my lease, anything that I have to change per unit, like the address and the date and the people and the fridge and stove, whatever's there, it's all highlighted in blue. So when I pull up a lease to move Rashaad in my house, I go through everything that's blue, and I know it has to change. And that way I don't get there and start to put them in the lease and realize that I made a clerical error that I might have missed, or I might miss a clerical error that I don't even realize.
Right.
I put down $1,000 security deposit on this house and it's $2,000, so I didn't change it.
Right.
So everything's highlighted in blue in my lease in my computer, and that way there's no mistakes when I go in to do it. And I do the same thing.
I did exactly the same thing except of blue, I just have it highlighted in yellow.
Yep. Yeah, you don't miss it.
I mean, I have 2 tenants moving in tomorrow, so I prepared the lease, sent it to my assistant, and all I had to do was just go through pages. Only thing I had to change was that was highlighted in yellow, that's going to be different for a tenant. Everything else stays exactly the same. Some of the units are going to be 3 bedrooms, some are going to be 1 bedroom. So whatever they don't use, if the inspection that I have is for 3 bedroom, if they don't have the second or third bedroom, just cross it out, not applicable. Everything else they still have to fill out. So it's just as simple as that. I don't have to read my lease again. Only thing I change is just go through, change the yellow highlighted part, and that's it. That's all I do. And email it to them. It covers my lead-based paint disclosure, the property inspection report, and then I send them, I email them, I make them initial that they've got a lead-based paint pamphlet that's required by the law. So, but I've never had any issues that I've run into where anybody's questioned about the lease. If generally if a tenant is not paying, they know that they're doing something wrong. And if you have everything correctly, legally documented, then you shouldn't have to worry about anything.
Can I ask a question?
Yeah, sure.
On your lease, you have the 18th disclosure. Is that required
Yes,
by law now, or is it?
I believe so.
It's required by law for 10 years.
Yeah.
It's 1978 or older.
If you just Google lead-based paint disclosure, it's, I mean, if you shoot me an email, I can send that to you. And it's just a PDF file. You can print it and give it to your tenants, or you can email it to them. As long as the initial saying that they received it, that's all you need. So they have to initial in my news that they did receive it.
Is that for the state of Indiana?
I think it's a federal requirement, right?
It's federal.
Yeah, it's a federal.
Now for tenants also?
Yeah.
And you can buy 50 of them for like $5 or $10 off the site.
I'm sorry?
You can buy 50 of them in packets of 50 for something like $5 or $10 off the site.
Buy the pamphlet?
Okay.
Pamphlet.
Yeah.
You can actually download them for free.
I know, but I just read it, just handed it to you.
Oh, okay.
Instead of, cost, I can spend more on ink and paper than,
Yeah, that's true.
Okay.
I mean, I don't
And if the
even-
computer jams on the day I need it,
Right.
with more problems.
I mean, I just email it to them and make them initial that they got it, and it's the end of it. But this is how I calculate. I mean, these are the things I look at when I'm calculating if the property I want to buy, if it's a good investment or not. I calculate my NOI, which is net operating income, which is annual rental income minus your annual operating expenses. Annual operating expenses would include your maintenance, your day-to-day maintenance. It would include your lawn care, snow removal, taxes, insurance, and that kind of stuff. And then my initial investment that I'm going to pay, my total cost would be purchase price of the property, plus my closing cost, plus the repair cost that's needed. And then with the rental properties, one thing you should know is what is cap rate. Cap rate is your net operating income divided by your total initial investment. So if you're gonna buy a property that's gonna, after all the operating expenses, you're gonna net about $5,000 a year, and your total cost, including purchase price, plus closing cost, plus repair, is gonna be $50,000. So your cap rate would be 10% on that. And cap rate does not factor in your mortgage payment. That's not included in your cap rate. Cap rate is basically if you're buying property, paying all cash, what would be your rate of return? And I calculate my maximum purchase price is very simple. Whatever my gross monthly rent is, times 36 minus the repair cost. Basically, it comes down to I want to recover my payback, gross rental payback period to be no more than 3 years. If I'm buying in a little bit better area, I'm willing to pay a little bit more. So I increase, instead of 36, I would go up to 40 or 48, which would be, I'm okay to wait 4 years to get my money back. But if it's something East Chicago Hammond, I would want my money back to be in no more than 3 years. So I use gross monthly rental income times 36, and I take out the rental cost out, and repair cost out of it. So, for example, if I'm going to buy a house where it's going to rent for about $1,000 a month, and I calculate the repair cost is going to be $10,000, my maximum that I would want to pay for that house is $1,000 a month times 36 minus 10,000. So no more than $26,000 for the house. Just after I pay 26, spend 10,000 onto it. It's going to take me 3 years to recover my money back, just gross, based on gross rental income. Obviously, you're going to have some operating expenses, repairs, and stuff like that. But for the gross rental income, I want at least my money to come back in no more than 3 years. And like I said, gross payback period goes up or down depending on the area. If I'm buying in a little bit better part of area in Hestville or in South Meadow, I'll go up, instead of 3 months, I'll be okay with 3.5 months, or even 3.5 years, or even 4 years to get my money back, because there's going to be a little bit extra equity I'm going to have in the house. The appreciation is going to be a little bit more than some of the houses in East Chicago and North Hammond. So this is a real example of a house I bought. The monthly rental is going to be $995. Repair cost was going to be $7,000. So I calculated $995 times 36 minus 7,000 and my maximum that I wanted to pay was $28,820. I ended up buying the house for $28,000, but give or take, it ended up being a three-year gross payback period. What about some of the other landlords? What are you guys using a formula, or is there something else you guys look at when you buy a property? Anybody?
Dartboard.
Dartboard?
Okay.
I think that's a pretty good concept.
Yeah, I mean, that's how, I mean, like when I first started, like this, I only read a book called Flip and another book, Millionaire Investor, something like that. And then I didn't take any courses or anything, so that's what I would look at. I mean, everything aside, the numbers had to make sense at the end of the day. If the numbers made sense, everything else could be worked out. If I was looking in a little bit iffy neighborhood where I wasn't too sure, I would want my money to come back in less than 3 years. But as the market is going up, obviously that number is changing. But even now, you can still buy properties for where you can get your gross money back in about 3 years, give or take. So if you go in a higher area, I'm personally okay paying a little bit more for a single-family house in Hesville if I know the appreciation is going to be there. I was telling someone earlier, I bought a house 2 weeks ago, right, where the seller, on Chestnut,
Okay, yeah.
right, where the seller, it was seller's daughter who was at the closing.
Yeah, I believe it was.
Right?
Yeah.
Her mom had bought the house 10 years ago for 85.
80-something thousand, yeah.
85, 90.
Yeah.
And she got a good deal back then. And we bought the house for $22,500. She was walking away with
Like $200 or something.
Yeah, she was walking away with $200. Yeah. At first, I honestly thought she wasn't even going to sign the document. She hadn't looked at the HUD statement before she came to the closing.
Yeah.
I thought she wasn't going to sign. But she got up. She was really upset. She had no idea there was a existing, I think, 17,000 lien on the house.
Something like that, yeah.
So I think she got up, and I thought, okay, she's not going to sign. She walked out. I had to go. We had 3 closings that day, and I had to, rush to another meeting. So I walked out, and I saw her. She was just fuming outside, and she just seemed pretty upset. But I guess she had no choice at that point but to sell it. She ended up selling it and walked away with $200 or $200 dollars. Yeah. So, but that's the market we are in. I mean, it's unbelievable some of the houses you can pick on. That was listed on MLS, right?
Yeah, it was MLS.
That was listed on MLS. So it's crazy some of the houses you can buy nowadays. The closing that we did today on Spruce, I mean, I already have a buy lined up for that. Bought it for 24. I already have a buy lined up who's going to pay $49,000 for the house. We're going to put maybe $4,000 or $5,000 into it. And sorry, Manny, but it's not going to go on MLS, so there's no agent commission involved there, and there's no financing charges. I'm going to fix it. We close it today, so my guys are going in there tomorrow, start working on it. It'll be done by next week. We'll hopefully find a renter in a couple of weeks, and then as soon as it's rented out, the buyer is going to buy it from us. Any other questions, comments? What about some of the other guys? What are you guys using to calculate how much you want to pay for a house? Anything you guys are using?